Well, that's the key angle. I mean, it is true that the situation is very diverse, but the reality is this is the fourth or fifth wave, depending on some countries. And we've learned a couple of things from the precedent waves, is that the impact on economic activity, on growth, on jobs, and on corporate profits isn't as disruptive as the first wave. So that's the first thing I would say. The second thing is, once these waves pass, then you have a catch-up effect. So I would say the long-term damage from these waves is now relatively controlled. I wouldn't say that, depending on sectors, I wouldn't say that obviously it's inexistent, but I would say it is relatively kept under control. And this is how I would see, we will look through these waves, at least for now.
Samy, but if we consider the situation to date, what we've had, a very negative playbook for these nations, and then a response at a European level to try and inject money back into the system to help these economies regroup and recover in future. If some start to reverse, don't they require more fiscal spending? Isn't the current money that's been pledged just not going to be enough in that situation?
No, I don't think they have any limits. You're totally right to mention that. Again, we know that the short-term disruptions are measured. We know that there's a catch-up effect in the long term. And we also know that, you need to support the income loss that comes from these waves. We've had a pretty severe wave during the summer. And again, the economic impact, the medium-term economic impact of these waves was relatively measured. And we expect the same for this one. But you are right. It takes flexible monetary and fiscal policy to make sure that the damage from these waves remains measured. And this is what we had so far. So this is what we continue to expect. If they need money, the money is there. If they need flexible central banks are flexible.
Just very briefly, can you give us a view on oil and the import here? Because we've seen it flip a little bit weaker on the back of this economic story in Europe with COVID restrictions.
Well, there are two things. There's indeed the demand side, which, again, maybe there's expectations of lower demand on this COVID wave. And on the other hand, you are getting slightly more supply, right? The OPEC Plus, month after month, is going to match the recovering demand. So on both sides, we always said that a price above 80 was a little bit overshooting our kind of fair value target, which remains around 70.
Right.
So what we feel now is a bit of a normalization.